Good afternoon, everybody. This is Dan Hussey with ElliotWaveForecast.com, bringing you our live trading room recap for May 29th, 2014. Let's begin with the S&P 500. I want to kind of step back to the 4-hour chart and go over where we are and what we're looking for. There's definitely smaller time frame support levels we can find, but what I'm most concerned with now and watching for is for the completion of the S&P's rally from this 1800 to 1810 inflection zone to its 1930 targets. Once completed, we are going to start drawing up the next in the series long, drawn from an 1803 low to the highs, wherever they occur. If you notice, the 50% line would then come in, would be in confluence with this 1870 area for the S&P, where we have an open gap still, and an open gap at 1900. So I would anticipate some kind of downside after there into this area before the next big rally in the S&P. So that's kind of what I'm looking for. I'm on my hands waiting for this to start playing out and watching for the S&P's pullback after 1930 targets are filled. The dollar franc, we came down to a 15-minute time frame today to notice this 50% short that got a reaction off this high and has hit first targets. We're going to continue to watch, looking for continued downside. And if we step out to our 4-hour time frame, we're now kind of looking for the first targets from this 50% swing from high to low to get filled. So now we are looking for, and what looks like a market that has started to roll over. There could be one more final terminal push before the roll, but I'm seeing it as fairly unlikely now. But we'll see. And again, we have so much diverging momentum, and the 4-hour momentum has begun to roll over. And anytime that happens, it's almost always the start of a nice decline. So in the short term, we're going to be looking for, from these levels, a move down to the 89.10s. Again, maybe one new high before that move. But 89.10s are the first downside objective. They are the first targets from this full 50% short that has filled its entry. Equal legs up is still valid while we're below a 90.20, so easily could make a new minor high and then continue lower, but we're still at that turning point and looking for basically the highs in this area to be the highs for the start of June. Okay, going into the end of months, we look for a high or a low to form, for the starting of the new month. Pound US dollar, probably one of my favorite setups that has not traded yet. We're now looking for the market into 166.50, 166.30 support area. I'm going to be a buyer down here with stops below a 65.20 or stops at a 65.20 for a swing towards a 71.70. All right, this is a big extended long as well as equal legs down setup into a major inflection zone and 3 legs corrective that should provide some form of a bounce. Euro US dollar, the exact same situation that we have in the pound and dollar Swiss, just upside down. Got a expanding corrective flat, and we are looking for a rally. A break above a 36.40 breaks the series of shorts down off the highs and would confirm a short-term reversal for the euro US dollar. So again, nice diverging momentum to the downside. Maybe a new minor low before highs, but looking less and less likely as time plays out here. Aussie US dollar has gotten a rally again from this original equal leg support level. 50% short off the prior swing high to low. I put it up as a watch because we've seen it get a reaction and get free. There's a very, very high probability the Aussie US dollar is going to trade down to the 91.50 equal legs down support. That's A, B, C, or WXY, however you want to call it. It's still 3 legs down in that area. One of our more favored analysis is that it'll then produce a B wave before a larger move down or some kind of corrective wave off that 91.50 before move down and a test of the 90.60 full 50% support for the Aussie. Euro Aussie looks like it wants to make one more minor low into 145s. This is a huge level, you guys. It's a soft landing in 7 waves. You can see them here: 1, 2, 3, 4, 5, 6, and 7. We want to see the divergence in the momentum still. Excuse me. and it will maintain holding the equal leg setup still, even if 145s trade. So it's a big 50 back. Good divergence into this, completion of 7 swings down. 145 tens is the actual level. Could produce a major rally from that point towards a 164.50. Huge level. Gold, after breaking this out downside to the downside out of the range we've been watching, we're now looking for the next support on gold lower. More importantly, we're looking for resistance levels at 120 or 1280s and 1322s. If you want to be a seller, those are the 2 levels to look for. I don't see any good opportunities to buy gold, honestly, until 1,000, till we break way below lows and head towards that 960 area. So from larger swings. Dollar yen. I know I'm going fast, but it's a lot of recap of what we've already talked about. Dollar yen, hourly standpoint, we're holding a full 50% long and a 50% short. So it's going to be a knife fight between these levels until one breaks. We're still holding the 102.90 short off the prior highs. That trade got free now. And again, we're still looking for the swing to take us down to the 99.60s where you can be a better buyer. So very much looking for a push down to 102, 120 and below 101s. Next, pound US dollar or pound yen, excuse me, is confirming a move down to the 168.75, a retest of that support. We have an inflection zone between 168.75 and 167.60, so look for that to be a landing zone and to create a new downside trend line for what could be a larger wedge structure. This also could be an A, B, C wave flat, so we're looking for one more minor low below 167.77, but definitely price action looks like we should be heading down to test 169 next. Euro yen, very much a wedge, maybe another minor low, but looks fairly complete with the divergence we're getting now in this final leg. So we have completion of A, B, C potentially of a triangle structure. That's our favored analysis now, so looking for then a rally up to 141, 142 before it turned back over. If you notice this area that we've come down into, we are breaking below a 61.8 line, slightly less than what we broke above a 61.8 line. This is very typical of a wedge, is that it will stay within the distance it broke of a 61.8 line prior. So in other words, it's showing that compression and neither side having a clear move. So again, looking for a relief rally, but still corrective. Aussie yen, big inflection zone 94.80 to 95.20s. It's going to tell us a lot about the structure and if we're going to be heading down now. But this is an area, if you want to take opportunity for a swing trade short, this is where it happens, and that short could be good all the way down to 80s, because we know from the larger daily structure we have a 96 level here that is holding a full short, take us down below, break below the long levels that are holding, and ultimately into a much larger drawn from like the 2008 lows to highs, a 50% long level. We'll look at that tomorrow. It comes in around 80 to 82. So that would complete 3 legs down in a major correction for the Aussie yen. Pound Swiss has still held and defended 61.8 lines here. Remember, below a 149.75, we're going to be looking for the move down to 148 to be a buyer. So 148s would be next support for the pound Swiss on a break below 149.75s. Okay. So that pretty much concludes, I think, all the markets that we've been going over lately. Feel free to rewatch this video if that was very quick. There is not much that has changed over the last 2 days. There's only a few minor differences for a few charts. So it's starting to sound like a broken record, but believe me, we're at that point where things will either be right or wrong, and we'll find out, into the start of June here, into the end of the week, and into the end of the month, to set up for some pretty good trade setups that potentially could take us into and through the rest of the summer. So with that being said, have a great day, everybody, and we'll be back with you as price action develops.